We'll discuss Sam Bankman's multi-billion-dollar Fried's empire demise in this video. This is a tale of a man who became wealthy by exploiting other people after starting from nothing. When did things start to go awry after that? He made an effort to hide it. How did Sam Bankman-Fried fare? He lost everything, but how? What transpires now that his empire has fallen apart around him? You may learn about investing and how to make the best financial decisions for your life on Investor Facts. Make sure you click the subscription button and enable the notification bell if you haven't already. Share, like, and comment. The happiest day of Bankman-Fried's life, or one of his best, occurred on November 7, 2022, when the crypto king possessed a net worth of $16 billion in cryptocurrency. On November 8, though, this man's net worth took a sharp plunge to below $1 billion, starting to lose over 80% of his entire net worth in a single day. Do you think this day will go down in history as one of the biggest single-day economic losses? The co-founder and CEO of cryptocurrency exchange FTX, Bankman-Fried, declared bankruptcy on November 11, 2022. FTX formerly had a value of over $32 billion, a complete mess. Everybody around the globe was greatly shocked by the abrupt collapse of FTX, which has had a tremendous impact on those who traded and participated extensively in it. Bankman admitted his part in the cryptocurrency's breakdown, saying, "I sincerely apologize. That is the greatest thing I messed up. This is not what one might anticipate from someone who has lately blamed Mark Zuckerberg for investing money in the metaverse, while simultaneously trying to lay off thousands of Meta employees." Bankman is currently dealing with something even worse than the firm he insulted. Bankman-Fried was raised at Stanford University, where both of his parents taught law. Prior to co-founding FTX with Gary Wang in 2019, he was formerly known to operate as a Wall Street trader. That was FTX that you meant when you said something was incredibly huge and performing exceptionally well. Several top capital firms back and had high regard for the cryptocurrency exchange. The majority of people's cryptocurrency storage, purchases, and sales took place on FTX, which quickly grew to become the second largest cryptocurrency exchange on the planet. Sam Bankman, often known as SBF, was praised as the JP Morgan of the cryptocurrency business in every corner and nook. Although the labels will now be removed and replaced, it was possible to view the FTX brand on Mercedes F1 race vehicles at the Miami Heat's home arena. SBF has become one of the wealthiest individuals in the world. Despite the fact that FTX was the hottest topic at that time, his overall net worth was $26 billion, despite the fact that you couldn't tell by looking at him. He didn't have a reputation for being a big spender. Instead, he only drove a Toyota Corolla and slept on a beanbag in his office. He does, however, indulge a little by purchasing the opulent apartment in Bahamas. Gopher, his golden doodle, and 10 other roommates are known to live with him. It has been reported that all of his housemates have dated one another at some point, and reputable intelligence tells Coin IC, a crypto news website, that a group of young people in the Bahamas run the entire operation. Some of his roommates are former co-workers, while others he encountered while attending MIT when he was a student. However, Caroline Ellison, who was formerly the CEO of Alameda Research, shines as one of the notable individuals he dated. Let's go to the start of this discussion. Bankman-Fried established the quantitative trading company Alameda Research in 2017, and FTX 2 years later. Alameda and FTX were initially intended to be independent businesses, but over time, they became involved in some way and became closer to one another. The creation of two distinct trading entities by Bankman has already sparked some skepticism among stakeholders. Traders and investors were worried that there would be a potential conflict of interest in the form of research receiving favorable treatment on FTX or the other way around. Nonetheless, Bankman reassured the populace that the two businesses are distinct, asking, how did the issue begin? Binance was one of the initial businesses to invest in FTX when it originally launched. Whenever the crypto market fell earlier this year, FTX quickly expanded and emerged as Binance's top challenger. SBF was forced to bail out numerous companies for roughly $1 billion, utilizing hazardous investments from Alameda in order to help faltering crypto enterprises. One of those businesses that received funding was Voyager Digital, a cryptocurrency bank that Bankman claimed he felt obligated to support. He said that protecting customers' rights comes first, followed by preventing the spread of disease across the environment. Unfortunately, Bankman's reputation as the crypto industry's savior faded quickly. A couple of months later, Voyager Digital declared bankruptcy, which cost Alameda $500 million. Alameda was having issues. On November 2, CoinDesk released a report based on the income statement of Alameda, a record that had been hacked. Alameda stated in the leaked document that it would have over $14 billion in assets by the end of June. But it found out that the majority of it was made out of FTX coins. The balance report was insufficient, but Caroline Ellison stated that Alameda's financial position was under control. Then, traders began to leave FTX because they hadn't purchased even a single ounce of it. Guys, the situation didn't stop there. On November 6, Binance declared that they would sell $580 million worth of FFT. According to CEO Chanpeng Zhao, the choice was made as a result of the latest discoveries. Due to the sudden decline in the price of FFT and the ensuing wave of traders' withdrawals, FTX handled $4 billion worth of transactions on that day, and by the 7th of November, the figure had risen to $6 billion. On November 8th, FTX was in trouble since it appeared that FTX was about to fail. The business was put up for sale by Binance, even though on November 9th, the company withdrew from the non-binding deal. They indicated that FTX handled customers' monies improperly and that there have been investigations by U.S. agencies, while simultaneously claiming that their choice was the result of business investigative work. FTX had already been fully engulfed in a wildfire at this moment, and a report published by Journal the following day corroborated it. Want to learn more about this? Watch carefully. There's more to come. The magazine said that FTX funded Alameda's reckless wager with money from its customers. Do you recall the $500 million that Alameda lost by funding Voyager Digital? As it turns out, SBF illegally transferred $10 billion of customer funds into Alameda's twin firm in an effort to prevent the bank from failing. Despite the fact that Alameda and FTX were intimately connected, this disclosure came as a complete surprise to the whole crypto community. According to reports, Bankman-Fried created a backdoor in FTX accounting system that allowed him to transfer billions of dollars undetected, not even by external auditors. However, SBF claims that it is not what it seems to be and that he told Reuters in texts that we didn't secretly transfer. It becomes wilder, fellas. We had a perplexing internal tagging and misunderstandings. Of the funds left at FTX, it is suspected that hundreds of millions of dollars were stolen. Following Bankman-Fried's resignation as CEO and the bankruptcy filings of FTX and Alameda, a new CEO arrived and acknowledged the hack. Since this act may result in criminal charges, FTX is currently working with law enforcement. Authorities in the United States have been investigating FTX and Alameda research. The cryptocurrency king might potentially lose everything with just one poor SBF ruling. Not even just him, but the whole cryptocurrency sector, which is still rebounding from the decline in its value in May, acknowledges the rise in interest rates. Even though the investigation into this catastrophe could take years, the exchange's continued operation is still being debated by lawyers. The situation might also lead to further control of the cryptocurrency market. The dilemma of clients who demand a return of their money is another. Funds have been suspended by FTX till further notice, and it is unclear how much will be retrieved through bankruptcy procedure. A significant lesson to be learned is that cryptocurrency regulation still lags behind how quickly the sector has developed. If you're wondering, that's a significant issue. Regarding purchasing cryptocurrency, we must exercise extreme caution. Do your research and think about how you're holding it. Thanks for watching the entire clip. If you like it, kindly let us know by hitting the like and subscribe buttons. Also, don't forget to enable the notification bell so you can be the first to know when we post a new video. In the following video, I'll see you. Goodbye.